Anyone can become rich. You just need to know how. In this video, I'm going to show you how to invest your first £100 using this simple two-step process and how much you need to invest per month to become a millionaire. Let's get into it. The point of investing is for your money to increase in value without you actively needing to do anything. And there are so many different things that you can invest in. Stocks, shares, equities, index funds, bonds, fine art, crypto, NFTs, foreign exchange, wine. And to be honest, I get it. It can all be a little overwhelming. So let's just focus on stocks and shares and how you can invest in these. And it really is a simple two-step process that has been over-exaggerated and blown massively out of proportion. We'll run through this process in a moment. But first, let's get into two of the reasons why you should be investing. The reason number one, inflation. So over the course of time, things gradually get a little bit more expensive. And you may notice this recently, where we had a big increase in the cost of goods, such as grocery or oil and gas and electricity. So this happens every year. And although the past few years might have been a little bit higher, generally the rate of inflation increases around 3 to 4% each year. So things are getting 3 to 4% more expensive. And number two is to make more money. So let's look at this example of someone investing £100 versus someone who is saving £100 and what the difference is over the course of time. So the first person saves £100 every month for 30 years. 30 years later, that person then has £36,000 in their bank account. However, person number two decides to invest that £100 every month for 30 years. As this money grows over that course of time, they then end up with £208,000 in their investment account. That is £172,000 more just because this person chose to invest the money rather than save it. For more reasons why you should be investing, check this video I've linked up here. So, investing in stocks and shares. On average, the stock market increases by about 11% each year. And when investing in stocks, we're not trying to beat the market. That average 11% growth is great. We're not going to be greedy and try and increase this. We're just going to settle for being average. Because it's when you start chasing really high returns above this that you start opening yourself up to risk. So let's get into the very simple two-step process to investing. This first step should take about 10 minutes and it's as simple as opening up a bank account. All you need to do is open up an investment account and then transfer a small bit of money into this account. There are many different types of investment accounts: brokerage accounts, robo-advisors, pension accounts, ISAs in the UK, 401ks in the US, or traditional or Roth IRAs in the US, or supers in Australia. But please make sure you do your own research when deciding which one to go with. I personally have a stocks and shares ISA in the UK because these are tax-free, and a Roth IRA is the equivalent in the US. So this means you don't have to pay any tax on the money invested or the money gained in that account. Now this is good for two reasons. Number one, less tax. And number two, you don't have to worry about filling out those boring tax returns at the end of the year. So to recap, for this step, you need to pick a provider that best suits you, go onto their website and open up the account, and then just transfer a small amount of money into that account. Start small and you can always add more money as your confidence increases. And that's the first step done. On to the next step. So step number two, now you will have some money sat in your investment account as cash. And what we want to do next is invest that money so you can start seeing the rewards and growing your wealth. And here we're going to look to the expertise of Warren Buffett. So Warren Buffett is an American businessman, a philanthropist, and one of the best known investors in the world. He currently has a net worth of over $122 billion, but actually 99% of that wealth was generated after his 50th birthday. And this was due to the power of compound interest. His advice: beginners should not try to buy individual stocks, as we do not have the information to know which stocks to buy and when. Instead, beginners should invest in index funds. So what is an index fund? So a fund is just a basket of stocks and shares for a bunch of different companies. And the index tracks a stock market group like the S&P 500. Now there are a range of different index funds focusing on emerging markets, sustainable companies, large corporations, or small cap companies. So when you've picked your investment account provider, have a look on their website at the different fund options and the information that they've got there. Here are the three things to consider. Number one, the past performance of the fund. Basically, you're just looking for a gradual upwards line here. Number two, look for a fund with low management fees, so you're not giving them too much of your earnings. And number three, a diverse or wide range of companies. This is because the more companies and industries and regions that you invest in, the more you spread out your risk. So once you've picked a fund, you just need to click buy or deal, and now you're an investor. So if you're really intimidated by the different fund options, you can pick a robo-advisor or a pre-made portfolio. Now these do have slightly higher management fees, but if it stops you from worrying or procrastinating or delaying, then it's much better that you get your money in these accounts and start it growing now, rather than waiting for multiple years until you have the confidence to do this on your own. That way, you can make the most of your time to grow your money. And once you've got your confidence up and your money growing, you can always choose your own funds to invest your money in a future year. So just take it nice and slowly, invest a small amount of money into a fund, and then leave the money there. So let me quickly address some of the worries you may have. Common worry number one, you don't think you have enough money. Now, investing is not just for rich people. It's how those rich people actually got rich. You can start with as little as £50 and go from there. And number two, you're worried about losing your money. Now, these statistics show your chance of making money if you invest for the set number of years. And if you invest for over 20 years, you have a 99% chance of making money. Now, we are really focusing on long-term investing here, investing for 5 or more years, so your money has that chance to grow. And all you need to do is just keep your money invested until the time when you need to use it. And there may be some years where the money goes up, or other years where it temporarily goes down. But just keep holding on to those funds and stocks and shares throughout the journey and don't panic sell. Now's the time to get started. You will look back in 5 to 10 years' time and be happy that you took this first step. No matter whether you started off investing £50 or if you started investing more. Just build up your confidence and gradually your money will grow and you will be able to invest more. If you've learned something about investing from this video, please send it to one of your friends so we can start to close the investment knowledge gap. If you want to learn more about how compound interest works, then check out this video here.